Payne Capital Management's Ryan Payne, Geltrude and Company's Dan Geltrude, and from the oil pits, the man himself, Phil Flynn. Great to have all of you here. Phil, to you first on this surprise news out of OPEC Plus. This is a heck of a production cut. It's going to go from May to the end of the year, and this really took the markets by surprise.
It did, and I call it the revenge of the cartel, Cheryl, because OPEC is sending a message to the Biden administration and to the United States that there's a new sheriff in town. You know, that thought of U.S. energy production leading the world and acting as a deterrent to OPEC, those days are over. And this is a real slap in the face to the Biden administration and to the United States consumer. The Biden administration welcomed this production cut with their energy policies, and now we're going to pay for those policies at the pump this summer.
Yeah, Dan Geltrude, you look at a lot of the oil majors I was just mentioning. As you can see on your screen, you've got Chevron up. That's a big performer today. That's one of the energy companies that you like. So at this point, you're saying, let's take another look at these names and these stocks on that side of it.
Absolutely. And look, when you're dealing with oil companies like Chevron, there's going to be ups and downs. Looks like we're heading towards an up. That's fine. But the reason that I like Chevron, it's a steady company, steady profits and dividends. In this market, I think you have to look at not just appreciation, but what do those dividends look like? How do you mitigate your risk? Because it's going to get choppy.
Yeah, well, it's going to get choppy, but how do we play that, Ryan? Because, if you talk about oil, you have to talk about China and the reopening story. That is China right now. So we've got OPEC Plus that's cutting on the one side and China reopening after ending zero COVID on the other side. That tells me that there's a lot of pressure to the upside. And we're going into the summer driving season.
Yeah, no, it's a great point. And I think the China reopening, as bad as it is for oil prices, it's phenomenal for the global economy, right? You're starting to see copper prices have gone up a lot, steel prices have gone up a lot, which just speaks to the fact that they're back in business and they're going to buy a lot of goods and services from across the world. So it actually makes me more optimistic that you have this second largest economy in the world, one of the biggest consumers now is going to be buying goods and services. So I think overall, that makes me more optimistic, even if oil prices happen to go up a little bit.
Yeah, that's interesting. Phil, let's talk about this as we go into the summer driving season. We have seen demand surge. After COVID, especially in 2022, people were driving, they were flying, they were out, they were about. What does the consumer face this summer, in your opinion?
Everybody thought $4 a gallon was a given. Now it's definitely a given. Now the question is, will we hit $5 a gallon? I'm afraid consumers are in for a very expensive summer. It's a new era of higher prices. And if we don't get into a recession, I still think that there's a lot of pent-up demand by the consumers. And I agree with Dan. I mean, I think Chevron's a great stock. I remember ExxonMobil. I remember everybody hated that stock. That's one of my favorites if you're looking for a reliable. And then take a look at Rig, Transocean. Everybody loved that stock many years ago. It crashed. What a comeback story. I think Transocean is going to be the story, the reemergence of the cleanest type of technology to bring oil to the global market is offshore. And I think that stock's going to do very well in this new environment of sharply rising energy prices.
Let's talk about the economy, Ryan, because obviously the other big question here is if you see the inflationary pressures hitting the economy from the oil side of things and gasoline prices, which has already helped us get to 6% on CPI year over year.
Yep.
Does that tell you that the Fed is going to pause? There's about a 58% chance right now that the Fed is going to only do a quarter point in May or June, not both, but one.
Yeah, I mean, you can almost flip a coin right now. I always lean on the optimistic side, and I feel like the Fed here may actually pause next month. And because I think at this point, look, you just saw producers paid, price index paid, that was down. That's a disinflationary sign. Commodities in general down like 13% year over year. The Fed's favorite gauge of CPI was down on Friday, the PCE. So it's kind of like you don't need a weatherman to know which way the wind blows. I'm from Philly. I keep it really simple. And it's like, look, inflation's coming down. Wages are staying strong. And wages over inflation now are growing. Like, I'm not a rocket scientist, but that's the sign of a soft landing that everyone on Wall Street doesn't want to acknowledge. And they've been dead wrong. So it's kind of like embrace the fact that things are getting better.
Yeah, Dan, it's almost like the banking debacle that we saw with Silicon Valley Bank and with Signature kind of gave us this entry to say, okay, things are, not so great. Crisis in the banking industry. Again, if the Fed stops, chills out, whatever they do, keeping it simple. I like keeping it simple and real like you do. That tells me that we avoid a recession.
Well, it's certainly possible. The question is whether Jay Powell will actually listen, okay? Because he's committed the Fed to getting the rates or getting inflation down to 2%. We are a long way off from doing that. However, the bank crisis helped him. Right? That helped him out because it caused a potential for a nationwide or maybe worldwide global crisis in banking. So now he's got to think about it and say, well, listen, if I pause this, I could stabilize the banks. How many more hints do you need?
Yeah, exactly. Hey, Phil, because oil is the story of the day, I'll give you final word as we wrap off our floor show. Final thoughts before we go.
I final thought. I think that this production cut by OPEC was basically because we decided not to buy oil back from the Strategic Petroleum Reserve when we said we did below $70 a barrel. So this is definitely a slap in the face at the Biden administration, and they're saying, take that. So take that, mister. And that's from OPEC to the Bidens.
Things didn't go so well. Yeah. But no, let's build more energy, more wind farms and solar panels. Let's do that. That'll help. All right. Little humor there. Phil Flynn, Ryan Payne, Dan Geltrude. Guys, thank you very much. Appreciate it.
Thanks.
Thank you.
All right.